You're still tuned into EconoChat. Let's Talk Business with Mr. Daniel Steinman. I'm your hostess, Elsie Bitivinyane. I forgot to mention that I'm Elsie Bitivinyane, Mr. Daniel Steinman. So welcome back from that short break. We are talking yield curve, and there's more to talk about, because the year is still out there. But today we are talking about yield curve. So you need to tell us a bit more, Mr. Daniel Steinman. What is yield curve?
Okay, Elsie,
what role does it play?
Recap.
Why is it there?
We're talking about the capital market,
Yeah.
and we're talking about government bonds, which is the form in which government sells its debt. And you must not lend your ears too much to all this noise about government debt levels and this and that. I can guarantee you that the debt of the Namibian government is tiny compared to the debt of other African governments, compared to the debt of European countries, compared to the debt of the United States. And the worst one is Japan. We are looking at, I think, 69% or 70% of GDP right now, debt level, total debt. Japan is at 225. It means that if they just pay back 1% of their debt every year, it'll take them 225 years to settle that debt.
Sure.
Do you get a feel for the practical side of it?
Definitely.
So our debt is really nothing. And if you look at the promises in our economy, it is really insignificant. I predict in 5, 6, 7 years we'll be laughing at all this big debt debate, because it will, as the economy explodes, which I expect it to do, the ratio is just going to dwindle. It's going to evaporate. But let's now get back to what I'm talking about. There's basically a government bond, a GC, for every year in the short end of the curve. This is now closer to present, to today. So there's a GC25 and I think a GC27, and there's definitely a GC28, because I dealt with that this morning. And then there's a GC30 and a 32 and a 33 and a 35 and a 40 and the further out you go. So short end of the curve is closer to the current time. Long end of the curve is when you go 15, 20, 25, 30 years into the future. Then there's a GC, a government bond, for every 5 years, not every year. Now, the Bank of Namibia, they sort of cap the various bonds.
Okay.
Take, for instance, GC28, 4 years from now. You can't buy them. Not from the Bank of Namibia. They sold out.
Okay.
You can only buy them from other bondholders, from a bank or an institution or a rich individual who has bought them in the past. So the primary auctions for the shorter end of the curve, they're all full. The quota has been taken. So what you do get now in the weekly auction is from about GC30 onwards. And there's always, in the auction, there are 4 or 5 or 6 instruments. And then before the auction, it's indicated for this instrument, we want 500 million. For that one, 200 million. For that one, 800 million. And it's all determined by the investment needs of the government. So I think the important point is, to avoid drowning in the technicalities, is that the bond market is a way for the government to finance its functioning and its investment according to the priorities set in the national budget. Does that make sense? More or less,
It does.
So it means that the government doesn't want $50 billion now. They want 800 million now. And in next month they want 1.2 billion, and the month after that they want 500 million. You see, so it's like the income of any normal person or of any company. You don't need all the money now. If you get all the money now, you're going to turn into a really horrible person. You want to be guaranteed that throughout my working life I get money every month and every year, and it grows. And as I advance in my career, it gets more lucrative. Exactly the same sort of principle in the bond market.
That's very
the money,
clear.
the Bank of Namibia, as the custodian of the bond market, is very, very diligent in managing that curve. Now, immediately you can see, now I'm coming to that yield curve.
Yes.
What the hell? What is a yield curve? Well, it sounds very clever or impressive, but what is it? So we're talking about shorter duration, GC28, closer to the present, then gradually it moves out until we get to GC50, long duration. So that, and if you plot the values, the yields on a graph of all the GC, all the government bonds, you get a curve. It's an inverted hyperbolic curve. But nobody must crack their heads over what is the meaning of an inverted hyperbolic curve. It is a curve that starts with a steeper slope in the beginning. It goes up like this. Elsaby, we need to get a TV show. And people can see my hands. It goes up faster in the beginning, and then it flattens out. So it looks like the trajectory of a ball that you throw. It goes up quickly and then it flattens out.
Okay.
And this is what we talk about, the short end, the long end of the curve. And we draw a graph based on the yield. And what is the yield? A government bond works on a so-called discount principle. So if the government wants to, for argument's sake, this is just to illustrate, if they want to borrow 100 million, then they say the discount principle works like this. In the auction, you specify the yield. And that is if they want 100 million, they don't get 100 million. You give them 93 million. So the yield is 7%.
Okay.
Do you see that?
I see.
That difference?
Yeah.
You give them 93 million now, and in 5 or 6 or 10 years' time, when the bond comes to its maturity, they give you 100 million back. Yeah.
I see.
So, you see, it's not that complicated, although it is quite complicated, but the principle is fairly simple, the discount principle. So that difference between what they want or what they're going to give you in 5 years from now and what you invest now is called the yield. That is what you get back, and you know that you will get it back at the end of that.
No, definitely.
Yeah. You see,
So-
that's a yield. So what it means is that the further out you go into the future, the bigger the yield gets. So this is currently our capital market runs between 12 and 13% on the long end, and about, I would say, 7.5% to 9% on the short end.
Oh, okay. Buying bonds from the government, I think, is the best investment you can make.
Is a good
Because you
investment.
definitely know that you will get back.
Yeah. Well,
Your
the
mind
best
is-
investment you can make is diamonds, provided
Of course.
you didn't have to buy them in the
Because
first place.
But I believe that, buying bonds is also one of the best investments. But let's quickly go for the short break. And then once we come back, we continue this very interesting conversation.